How to analyze stock using technical indicators. Hello investors, welcome back. Even though today's topic is more related to trading than investing, we thought we have to do this video to keep our subscribers educated about trading. So today, we're going to cover the basics of technical analysis. We will show you how to predict the movement of a stock using technical indicators and chart patterns. Before we dive into the details, smash that like button so that the videos will reach to a broader audience, and also subscribe to our channel to get notifications while we post a new video. Let's get started. For beginners, who's wondering what technical analysis is? It is a method to analyze or anticipate the movement of a stock price using its chart patterns. We mainly use technical indicators to do this. Traders who use technical indicators doesn't care about the fundamentals of a company. It doesn't matter if the company is making a profit or loss, because we are just using it for the short term. There are thousands and thousands of indicators that you can use to analyze a stock, and because of this, it is very easy to get confused. In reality, you just have to use a few of them to analyze a stock. So for today's video, we will just use one indicator. Yes, you heard that right. With just this indicator, you can be a profitable trader in the stock market. And that indicator is moving averages. What's a moving average? Let me explain. But before that, you need to understand what a trend is. Remember that stocks doesn't go up or down in a straight line. It moves in wave patterns. If the stock is going up in a wave pattern, we call this a bullish trend or uptrend. And if the stock is going down, we call it a bearish trend or downtrend. Moving average is a trend-following indicator that helps us to determine if the stock is in a bullish or bearish trend. What does moving averages do? Moving average takes the average price of a stock in the given period and plots a point in the graph. Let's say you're using a moving average of 150. It means that it will take the average price of the last 150 days and plot a chart on it. There are two types of moving averages, simple and exponential. Both of them are almost similar, but simple moving average assigns equal weight for all values, whereas exponential moving average gives a higher weight to the recent values. Don't worry, you really don't have to understand what moving average does. You just have to understand how to use it. So for long-term technical analysis, we will use two simple moving averages. Let's take Tata Steel for example. This is a cyclical stock, and the wave pattern can be understood very easily. Go to tradingview.com, search for Tata Steel. Click on Indicators, search for Moving Average. Click on the moving average 2 times. Now on the top left section of the screen, you can see 2 moving average has been added with a value of 9. For long-term charts, we will use moving averages of 50 and 100. So, change the values from 9 to 50 and 100. Now, you can see that there are 2 line graphs that go along with the stock chart. And you can also see that these lines intersect at some points. So, how to analyze this? When the 50 moving average is on top of the 100 moving average, it signals a bullish trend. When the 50 moving average is below the 100 moving average, it signals a bearish trend. When the 50 moving average crosses above the 100 moving average, and both moving averages are sloping upwards, it signals a change of trend from bearish to bullish. When the 50 moving average crosses below the 100 moving average, and both moving averages are sloping downwards, it signals a change in trend bullish to bearish. So if you just follow the trend and buy on these 2 signals, you are already trading with a good strategy. Buy when the trend turns bullish. Ride the trend and sell when it changes to bearish. Also note that there are some points where the moving average are crossing each other, but both of them are not sloping up or down. This is not an entry point to buy or sell, because to define a change of trend, both moving averages must be sloping upwards or downwards. So you may be wondering now, how can I do it for the short term? Well, if you change your moving averages to 20 and 40, you will see that it will show you the short-term trends. Short-term trends are more riskier than long-term, as we do not have enough data to define the trend. But trading is all about being right more than being wrong. You will never have a setup that's 100% right. If someone tells you that they have such a strategy, run away from them. So why doesn't everyone follow this and make money? Well, everyone wants to make money faster, and the trend-following strategy is very boring. You have to wait for weeks to get profits or close a position. sometimes even months. This is the same reason most of them doesn't like long-term investing. There's no action in it. The higher the actions are, the more money your broker will make, and the more mistakes you will make. Trading is not for everyone. 90% of traders lose money in the market. Only a few percent become successful with trading. You should never use your entire savings to trade. Use majority of them for long-term low-risk investments. Only use a very small percent, maybe 10% of your money for trading. And you should always have separate accounts for both trading and investing. Every human being who's starting out in the stock market thinks that he has the special ability to pick winning stocks, sitting from his home with the same amount of information that's available to everyone. There's nothing wrong in feeling this way. This is just human nature. We do not have anything against you going for trading or short-term profits, but we will definitely ask you to do it in a way without risking your entire life savings on it. So that's all, folks. Hope this video was helpful. If you have any questions or suggestions, ask in the comment section below. And if you like this video, give us a thumbs up, as it really motivates us to create new videos. Also, subscribe to our channel to get notifications while we post a new video.